The overextended stock market appears to have snapped. We'll go over all the details, so stay tuned for the full episode. Welcome back. This is Richard with Wisdom Investor. Typically when the market goes up on bad news, that means the market is in a bull phase. Nothing will damage it no matter what happens. Well, when the opposite happens, we get bad news and the market reacts to the downside. That is telling us there's a market trend change coming. So we're starting to see that. We're starting to see selling in the markets. And we're going to look at the big picture here and see what that's telling us here now. Here's the headlines. Nasdaq drops 2%. Facebook sheds 5%. Typically, the markets work in extremes. They either go too far low or too far high and then work themselves back to the mean. Where do you think the market is headed? I'd like to know your thoughts on this, so leave a comment. We're looking at the Nasdaq 100 QQQ. This is a weekly chart, goes back a year and a half. You can see at the top right-hand corner, the Nasdaq 100 has been down 5 weeks in a row. It's down about 8% at the time of this video. Now, the first horizontal line shows a 10% drop. It's very possible at some point we get a 10% drop. Now, many of you are probably wondering, what should I do? Maybe I'm about to retire. I've saved up $500,000, and if the market goes down 10 or 20%, that could be quite a bit of money. Or maybe you're a new investor and you're wondering, when should I start investing in the markets? So right now with the Nasdaq 100 here, this market is still bullish despite the 8% drop. I don't see any reason to sell out at this point. Those that are looking for a buy point, we may get one here coming up soon. We're looking at the S&P 500 ETF SPY, SPY. Again, at the top right there, you'll see it's been down 5 weeks in a row. It's not even down 5% yet. It's, again, very possible we could get down to the 10% level at some point. Also, you may be in a stock that's down 20 to 25%. That is possible. There are some stocks that are in a bear market. Now, the SPY is still in a bull market despite the movement down. And I use the indicator at the very top right, the RSI indicator. You'll see that red line. It's above the 50 line, the midpoint, and it's still positive. We're looking at the Dow Jones Industrials now. Again, at the top right, you'll see this has been down 6 weeks in a row. Again, it's not even down 5% yet. Now we have a support level of 33,500 area. Starts breaking below that, very likely it could go lower. Again, in this situation, it's still in a bullish phase. We're looking at the S&P 500 ETF SPY. Now, markets don't go just straight down. So what are we going to look for here to see if we're going to be in a bear market and it's going to continue lower? If we get a bounce up, you can see the blue line that's moving up, but we can't break above the previous highs and we start back down again, especially if we break these lows we're at right now, where that blue arrow is moving down, that would be a pretty negative sign. So if we get a move back up, there's not much strength to that, then we start to sell off again and start to break those lows that you see there today. That would be bad news, and we're going to be in a bearish market for at least a few weeks more in that case. So those are some of the signs to look for here right now. I hope you enjoyed this video. Hope it was useful. Leave your comments if you have any comments or suggestions.